From the creators of Medicare Made Simple, this is the Retirement Focus Academy with Kevin Geiger. In addition to Medicare, there are many pieces to the modern retirement puzzle. This show talks about those pieces of retirement and the tools used to help the retired and soon to be retired toward their lifetime goals. The Academy is on the air. This is the Retirement Focus Academy.
Welcome to the Retirement Focus Academy, powered by Geiger Investments. Happy to be here with Kevin Geiger. I'm Mark Elliott. You can always go to the website to find out more, and there's a lot of different things. This is Retirement Focus Academy, so we certainly talk about the free resource that you have for financial questions, for retirement questions. The retirementfocusacademy.com, retirementfocusacademy.com. And the Academy has many different educational workshops covering all topics related to retirement. Of course, great resource, and it's always free of charge to you. retirementfocusacademy.com. You can always go to Kevin's website at Geiger Investments, geigerinvestments.com. We're in 2021, and the time is moving. Joe Biden is now president. So what does that mean to all of us? And does the government actually affect us? Let me start with that. I'm 61, Kevin, so I'm a lot older than you. And I'm of the opinion that I'm not sure that presidents have really affected my life. Now, maybe they do taxes or something like that, I suppose. I don't know. Maybe I just live in my own little bubble. Do you feel like they really do affect the everyday lives of Americans, or is it more the big corporations and that type of thing?
I think it's a combination of a lot of things, because I do think that we've kind of lived in a bubble when we were younger in our working years, because all we keep thinking in the back of our mindset is we're going to be saving money and thinking for retirement down the road after you get your kids through college and things like that. We have so many life stages that I think go on in our lives, and obviously currently I'm going through them, that I think we become kind of immune to what changes are happening. And over the years, we've had the taxes on our income change quite a bit, and for us, we just kind of deal with it. But when you're in retirement and you're on a fixed income, you got to be very concerned about how these maybe new tax brackets could either make or break your retirement. Because again, you know, if you have $5,000 a month that you plan on living on, and all of a sudden out of nowhere you have another 10% more in income taxes to pay, you know, that's $500 extra a month that you have to take out of your discretionary income to use for things like that. So you got to be concerned about that. And obviously with the new presidency happening, and obviously we have both the House and the Senate now being controlled by Democrats. They do have some agendas from what they've been talking about pushing some more taxes out there. Now, how is it going to affect retirees at this point? We don't know. I think a lot will transpire over the next couple of months, and we'll have to wait and see.
We'll certainly keep you updated right here on the Retirement Focus Academy with Kevin Geiger. Here we are in February now, and you think about a year ago is really when, there's a virus somewhere coming from China? What's going on here? That was right about the time the pandemic is headed our way. So here's my question for you then. Because of that, we're now a year into the pandemic. It's not gone away, that's for sure. What changes have you had to make to your practice to adapt to this COVID-19 situation?
You kind of hit the nail on the head when you're talking about this. You know, I remember about a year ago, this started kind of coming up on the radar, right? COVID, and we're all thinking, what is this? Is this the next flu, or whatever the case might be? But obviously it hit America pretty hard. Now, obviously, we got the vaccines being pushed out, which is great. I think this is going to kind of change things going forward. But, you know, we ran through a lot of stuff over the last course of the year. You know, we've had the election fraud fight that was going on, as you know, since November. And unfortunately, at the end, Trump lost his battle with that. And, of course, we had the Capitol riots that happened. So there's so many things that happened. But when it comes into 2021 and how it affects retirees, is they have to understand that every year, you know, we go, especially with the changeover in the government, we have to be conscious about what kind of changes could affect my retirement. Just because you've been doing things the way you've been doing for maybe the last 5 years or 10 years in retirement, you have to assume that you have to change or alter your plan based on whatever new taxes might come about. Some might be more favorable for you in retirement, and some could actually hurt you a little bit. So what I've been doing, you know, with our clients is we're taking a look at what's coming out and kind of getting a gist of where we see things maybe change in the tax areas, and try to find out new ways to be more efficient and find ways to cut taxes as much as we can, because taxes is going to be your number one killer as far as affecting your fixed income, you know, especially when it comes to your discretionary money, the money you have to spend to go out for dinners and things like that. So we're doing a lot of stuff. We're looking at what's happening, and we're definitely looking to make changes as we see fit that'll be in the best interest of our clients. And that's what we're doing through 2021 right now.
So that's a great point, because we've all had to adjust our everyday lives. Maybe we can't go down and sit in at the restaurant that we always used to do it, or what have you. And a big shout out to all the small business owners and restaurants and bars, and hope they made it through this. There's a whole bunch of them, over 100,000, that did not. So what types of changes are you making with your current base for this 2021 year?
Biggest things we're doing is we're taking a look at everything that our clients currently have. I've been a big advocate about this even since the Trump tax cuts have come out, that any chance we can to do Roth conversions on some traditional IRA money that clients have. And what do I mean by that for people that don't really understand? Well, if you convert your traditional IRA or your regular 401k that you might have had from a previous company and convert it to a Roth IRA, yeah, you might be paying some income taxes today, but we're paying it at lower tax rates today because I think the consensus is over the long haul, something's going to change over the next couple years, 10 years, maybe 15 years down the road. The tax rates are going to have to eventually go up. But if you convert this stuff to Roths, for example, this will now eliminate the tax burden of when you start drawing money out of these accounts because it's a tax-free withdrawal. So that's one of the biggest things that we're doing quite a bit. And the biggest thing is just making sure that we're starting to reduce some of this risk inside of our clients' portfolios, because we do see that we made it out of last year, surprisingly did pretty well after a pandemic hit. But, we don't know what the future is going to bring. So this is times to reallocate, take a different direction as far as what we're doing in our investments. And that's what we've been doing a lot of with our clients, just to kind of prevent any issues that could come about in the near future.
And if you have questions about, what if tax rates do change while I'm in retirement? How do I plan for that? And Kevin and the team at Geiger Investments certainly can help you do just that. And you can go to the retirementfocusacademy.com. There is a lot of information about taxes and how to maybe tackle some of these challenges. If you go to usdebtclock.org, right now we're about $28 trillion in debt as a nation. The U.S. debt clock also projects ahead. By 2025, we're almost $50 trillion in debt. That's why I think Kevin and most people think, hey, taxes have got to go up. That is a great topic. If you have concerns about that, are there ways for me to get more of my money into the Roth world? It's not right for everybody, and that's why every situation is taken as it is. When you come in and chat with Kevin, or do it on the phone or a Zoom meeting or what have you, it's all about you and your situation. Does it make sense to do a little forward thinking in the tax world and maybe look into that Roth conversions? Does it make sense to pay the taxes now? Because we're pretty confident taxes will be higher. But it's not right for everybody. That's why Kevin first doesn't just say, hey, you all should go to Ross. Well, that's not right for everybody. That's why it starts with a phone call, 843-790-9293. No cost for this, 843-790-9293. And, of course, you can always go and sign up for the workshops at retirementfocusacademy.com. There's no cost. There's no obligation for this. It's a great opportunity for you to educate yourself. retirementfocusacademy.com. Glad you're with us today for the Retirement Focus Academy radio program powered by Geiger Investments with Kevin Geiger. I'm Mark Elliott. Think back to 2008, right? The banking and housing financial crisis went from 2007, stopped in March of 09, and then March of 09 through until the pandemic. The markets kind of were on a longest bull run in Wall Street history. Do you see this year, 2021, being any different than, say, 2009 after the crash of 08? And what are you changing within your current clients' portfolios, prognosticating ahead?
So, it was an interesting article that came out from USA Today talking about what Fidelity said, which was interesting. So, just over 23% of baby boomers in their current 401ks or even just like an IRA account are taking way too much risk in the market. And I've seen this going on for years, and it's a big concern. But you know what? And looking back, I can see why they're doing it. So what's different about today versus 2008, 2009? Well, when we had the housing crash kick in 2008, most people were able to run towards treasury bonds and stuff like that. They were in their safe places. People were, if they were smart, were allocated better. Today, obviously, as we all know, the 10-year treasury is so low. Anything bond-related is basically doing nothing for them. So most people are taking too much risk in their portfolio, trying to find any growth they can. But from our client perspective, and any actually new prospect that's actually come in and sat with us, and we've looked at their stuff and evaluated and realized that they're taking too much risk with their portfolios. We showed them different alternative investment strategies to still get them that protection, if you want to call it, meaning they're not totally exposed to the market and they have a little more downside protection without having to take all the risk in the stock market. If you're in or near in retirement right now, this is the time, what I've been saying for years, it's getting to the point where we need to start pulling those chips off that casino table, because you've won a ton of money, and that's great. Could you win a little more in the next 6 months, a year, 2 years? Possibly. But would you rather lock in what you have instead of having to worry about the fact that you might lose it all? Because we saw what happened with the little tremor of last year when the pandemic hit and how quickly the market can downturn. Well, if we go into another recession at some point, it's going to have a quicker downturn like it did in '08, and you've got to be conscious of this stuff. So it really comes down to utilizing the other tools and resources that are out there to still create safety and preservation as far as your money you've grown. And then at the same time, positioning things throughout the market where you diversify enough where you don't take too much risk in one area. For example, I own a bunch of tech stocks, and that's what I'm doing, and I've done so well last year, right? The NASDAQ had an amazing year. Well, maybe this is the time to start pulling those chips off the table a little bit and putting them in a different area. Those are the kind of things that you should be doing and you need to be doing going into this new year, because we don't know where things are going to go, and it's something you got to be conscious about.
It's kind of the big question. Would you rather be rich or would you rather never be poor? And I think with 401ks and IRAs, that's where we think it's the only place to get returns on our money. So we do take more risk. I think that's reasonable. Are there any other areas where maybe we're taking too much risk, maybe in our portfolio, and some are not taking enough risk, and maybe some have the exact amount of risk? Everybody's situation is different. Kevin and the team at Geiger Investments can certainly help you figure out where you are in that risk scale. The number for that, you'd like to just find out, hey, am I taking too much risk? 843-790-9293. But are there some areas for those that are entering retirement, say in 2021, 22, or 23? So in the next few years, they're getting into retirement, and there are things that they maybe don't really know or understand, or maybe they're not even clear on certain things. Are there certain areas where you think that a lot of people aren't really clear on things?
I'd say a lot of things. And why do I say that? Well, for the last 20, 30, maybe 40 years, all you've been doing is putting money into your 401k type of account. And because of that, you've obviously been accumulating assets. You've done very well, obviously, since 2008, which is where most new retirees have made most of their wealth, is because they decided to kick things up into second gear, put more money in because they were about 10 years away from retirement. And so they've made the most amount of money they made in this last 10 or 11 years. Well, you know, for a lot of them, they don't understand is the accumulation stage is the easy part. As funny as it sounds, that's the easiest part, is putting money away and letting it grow. But you've got to understand that retirement's not just about having a big nest egg and working and winging it and just making it work. You've got to understand things like your Social Security benefits. If you and your spouse are both eligible for maybe Social Security withdrawals at 62, does it make sense to start it that early? Or should you wait till full retirement? Or should one of you take it at full retirement and the other one wait till age 70 to get the 8% roll up? You know, there's things like that. You've got to be really conscious as far as what you're doing with the stuff. And the same token, you've got to understand taxes and how it's going to affect you in retirement. It's not just pulling money off your IRA account that you've accumulated a good chunk of change in. You've got to make sure that you're pulling your income from different areas to lower your tax brackets, whether it's converting some stuff to Roth or pulling money from maybe after-tax money that you've saved up. Proper portfolio management. This is a big one. I've been preaching it and I've been talking about it all day here, is you've got to make sure that you're not taking too much risk in your portfolio. You need to diversify. You've got to do things right. But then it really just kind of comes down to really understanding what RMDs are. And you're going to hear this term a lot, required minimum distribution, which luckily last year the Secure Act now moved that up to 72. Well, what does that mean? Well, if you're turning 72, you're required by the IRS to start taking your RMD, your required minimum distributions, off your traditional IRA type of accounts. Not your Roths, but your traditionals. And actually at 72, it's 3.91% of the total value of all your IRA accounts. So understand that, because I've seen over the years people that became clients of ours that actually got hit pretty hard with a 50% penalty for the money they didn't take out the years they were required to take those withdrawals. And then it just really comes down to what I call the circle of life and retirement. You've got to make sure you're doing your income planning, your investment planning, your tax planning, your Social Security benefit optimizer, as I call it, health care, long-term care. Long-term care is a big piece of it. And then, of course, it comes down to Making sure your spouse, if you're married, are you setting things up properly to make sure that they're taken care of, God forbid something happens? Do you have a trust in place? Do you have a power of attorney? Legacy planning. I mean, I can go all day long talking about this stuff, but there's so many areas to cover, and this is why someone that focuses on retirement, like we do in our office, this is what we do. We focus on these areas to make sure that we're covering that stuff, and this is all the stuff we talk about in our classes for people that want to learn about it. Maybe they want to do it on their own. A lot of them end up showing up and become clients of ours because they realize there's just more to the puzzle than they actually realize. So there's a whole long list of things we can go through, and we could talk about this for about 7 hours, but I'm sure I'll bore everyone on the line here. But it's important for people to really realize there's more to it than just accumulating your assets like you did in your 401k.
Kevin went through that pretty quick. Think about it. Required minimum distributions at the age of 72 now. They raised it, with the Secure Act from 70 and a half. Now it's 72. But if you don't pay it, let's say you owe $10,000, you didn't pay it, you didn't know you needed to do that. Now your fine is $10,000. It's double your money, right? 50% penalty. So those types of things, all those different areas that Kevin just talked about, Geiger Investments are here to help you. It starts with a phone call, 843-790-9293. There's no cost for this. The team is here to help. They just don't know if they can help you. They don't know your situation. What do you want to know more about? 843-790-9293, which is why Kevin and the Geiger Investments team started the non-for-profit Retirement Focus Academy. Go to that website. Learn more. Find the areas that you want to know more about. There'll be a workshop on it, I guarantee you. retirementfocusacademy.com, a great resource for anyone getting closer and closer to retirement. And there's financial things. You might be in your 40s. Still might be a great place to go to learn. retirementfocusacademy.com. It's a great resource. It's always free of charge to you. retirementfocusacademy.com. We're halfway through the program. We've got more with Kevin Geiger of Geiger Investments. This is the Retirement Focus Academy Show. We're back right after this.
You know what you want to do in retirement, but do you know how to get there? Get the retirement planning information you need by joining Kevin Geiger of Geiger Investments for the Retirement Focus Academy. What's the best way for you to take Social Security? When can you sign up for Medicare, and what does it actually cover? What and is there a way to lower your tax bill? These and much more will be discussed. To enroll in an upcoming virtual Retirement Focus Academy course, visit retirementfocusacademy.com or call 843-790-9293. Plan today so you can do the things you've dreamt about doing in retirement. Sign up for the Retirement Focus Academy with Kevin Geiger of Geiger Investments at retirementfocusacademy.com or call 843-790-9293. Advisory services offered through Black Ridge Asset Management, LLC, a registered investment advisor. Securities offered through Peak Brokerage Services, LLC, member FINRA SIPC. Black Ridge Asset Management, LLC and Geiger Investments are separate and independent entities from Peak Brokerage Services, LLC. Our firm is not affiliated with the U.S. government.
Glad you're with us today for the Retirement Focus Academy program powered by Geiger Investments. Kevin Geiger of Geiger Investments. If you have Medicare questions, you can always go to carolinamedicare.com. A lot of great information there. You can also go to the non-for-profit Retirement Focus Academy. There's all kinds of different topics, educational workshops on a lot of different financial topics, retirement topics there. There's no cost. retirementfocusacademy.com. Do some of your own due diligence heading into retirement. Some of the questions you may have might get answered right there. retirementfocusacademy.com. retirementfocusacademy.com. And Kevin, at the end of the last segment, you're talking about the importance of educating ourselves, which is why you started the Retirement Focus Academy. How often over the last couple decades that you have been in business have you met with a new couple where one of them just knew that they were right? They know it all. I'm surprised those kind of people even come in to ask you things. Maybe the wife says, I know you're handling all our investments, honey, but I don't feel comfortable. What if something happens to you? Will I be okay? Okay, I'll do it for you, but I know what I'm doing. Do you get that often?
Yeah, we do. And being in the business now for, 20 years, it's a totally different generation of people retiring today. 20 years ago, you had people that they realize that they don't know enough and they trust a professional to handle things. And then, of course, in the last 20 years, so much has changed where now there's so much information on the internet. People have been investing into their own 401ks. And, of course, most of the nest eggs been built up over this last bull run we've basically had. So in their mindset, they've done everything right. They know everything. They're the do-it-yourselfer generation, as I call it. But often we have the spouse who's the first one to call us. And many times it's usually the wife calling saying, We like to come in, I'm a little concerned about what we're doing. I don't understand what my husband's doing exactly, but I just want to get a second opinion. And they come in and you'll see the husband sitting across the table, and I immediately know exactly what's going on. He doesn't want to be here. He realizes that his wife is just trying to get a better understanding. He doesn't want to pay anyone to do anything because he's done it all himself. And then when we go through things and we start breaking things out for him, and I start pointing out all these things we talked about before the break, about all these different areas that he's just not realizing about, then all of a sudden you start seeing him kind of lighten up quite a bit, sit in his chair, realizing maybe I didn't, think of everything. And so, which is great, because half the time we usually are able to get the spouse on board to say, you need to start doing some things to properly plan for things so you don't run out of money in retirement, because that's probably what the number one fear in retirement is, worrying about running out of money. But, if they can get the good information, the right information, and like we built our whole practice on education first, business second, and we always invite them to say, hey, if you don't want to do business with us, yes, that's fine, but come to our classes. At least come to, 2 or 3 or 4 classes and learn about different areas, and you might actually realize now you understand where Geiger Investments and myself, where we fit in that puzzle to make sure that we're doing the right things for you so we can make sure your retirement is successful. So we do see this, and I'm seeing it more and more every day as times are changing here.
So, Kevin, what advice would you give someone within a few years of retirement, what they could do maybe to better prepare themselves for retirement? What advice do you have?
The biggest thing I could tell you right off the bat is education. You have all these resources, Retirement Focus Academy, where we have now 15 classes that you can come to or watch on demand and things like that to really get a grasp of what you should be doing. Secondly, take less risk with your portfolio. Third, put a budget together. How much you get planning on spending in retirement and how much you think you can actually pull out as far as income, and at least have your mini plan put together. And then last is sitting down with us in our office where we can actually look at what you put together, figure out where the holes are, and actually put you in the right direction so you get to see what you should be doing and maybe what you'd actually did that looks right and stuff like that, so you can feel pretty good and pat yourself in the back saying, yep, I did that. I came up with that idea, but maybe we'll find a lot of the holes that you didn't realize, so you're doing all the right things so your retirement can be successful, because that's what really the biggest thing at the end of the day is, making sure you're living happy, relaxed, and having fun in retirement, because that's what it's supposed to be about.
Yeah, you'd certainly like to retire into a stress-free retirement. We've had plenty of stress during our working years, would like retirement to be as stress-free as possible. We know there'll still be hurdles that we have to leap, because that's just how life comes at us. If you would like a second opinion, for example, that Kevin was just talking about, you can always call the team at Geiger Investments, 843-790-9293. No cost for this. There's no obligation. There's no pressure. The team at Geiger Investments here to help. They just don't know if they can help till they hear your situation. 843-790-9293. And again, I'll say it again, Retirement Focus Academy. Kevin talked about the 15 workshops that they have there. There's no cost to you to go there. It's a way for you to educate yourself on things you're not really sure about. Get some more insight, retirementfocusacademy.com. And with that being said, if I said, Kevin, all right, what are the top 3 mistakes that many pre-retirees make before they retire? Would you have 3? Nobody makes that many mistakes, do they?
There's probably
about
about 50 mistakes, but we'll go by the top 3 I can think of the top of my head that I've probably seen personally with clients over the last 5 or 10 years. I would say the biggest ones is people that are going to retirement have big plans for all these trips they want to do, and they all of a sudden they have an agenda for the next 5 years of all these places they want to go. Next thing you know, I've seen them in retirement, and they're going on 17 trips a year, endless budget of money that they think they can kind of go through, and then all of a sudden I'm telling them, you got to start pumping the brakes. It's great, you want to travel and all the stuff, but that is one of the biggest killers to your retirement savings. It's one thing about planning things out, but you want to spread things out. You want to make sure that your retirement savings can actually handle and absorb those types of trips as much as you want to do them. And then, of course, I would say another big one is not having a real budget. If they're not working with us and they're do-it-yourselfers, most of the time I've seen they've never had a budget in place, let alone even follow the budget they even had in place to make sure they're keeping their money in check and knowing where the money's going and where the money's coming in and things like that. And then, of course, probably the last couple ones I would say, and I know we said 3, but I'll throw 4 out there, is, healthcare and long-term care. You got to make sure you're backing yourself up with healthcare and long-term care, because if you go into a long-term care facility and you exhaust all your assets and you end up passing away 5 years later, now your spouse is left with nothing. and now they're moving in with maybe one of your kids because there's no money there. And I've seen this happen over and over and over. It's like a broken record when I see this. So those are areas you got to be really concerned about, and really making sure, and last most importantly, is make sure you have a plan in place if you're going to do this on your own to make sure your spouse is protected. The number one area I see always becoming a problem is the spouse is never protected in case something happens where you exhaust all your assets. Big things to think about, a lot of things you should be thinking about, and 2021 is a great year to make changes in that.
Yeah, and you think about it. 1935 is when Social Security came to be. 1965, Medicare started. The Secure Act did away with stretch IRAs. There are always things that are changing. And you and your team at Geiger Investments, Kevin, will be up to date on all the things that Joe Biden and his White House group and the Democrats, Congress and Senate and all of that, what they try to get through and how it affects us in our retirement. Because you have to stay up on that. Because laws change, you have to change with them and inform your clients. There's always new challenges that always pop up all the time. And if you're not staying on top of things, like you were talking about the required minimum distribution, I didn't know I need to pay that. And now you got a 50% penalty basically on top. You owed 10 grand, now it's 20 grand because you didn't know you were supposed to do it. There's a lot of moving parts here that at the end of the day, it's really about staying educated. And that's what you do for your clients. You help. They don't have to do all the research because you and your team do it for them. That's why you have the Retirement Focus Academy so people can educate themselves.
That's exactly right. And when it comes to Retirement Focus Academy, going into all the things we're doing going forward, we've expanded as much as we can in this because we realize that there's just too much bad information out there, and people need to be given a non-biased approach and just get an understanding as far as everything revolving around retirement that they might not have thought about. And so some of the good things going into this month, we're actually having the website all redesigned. People being able to go online and look at on-demand. We're recording these classes as an on-demand series. People click on these things and look at all the different videos and get it right away at their fingertips, as well as live classes we've got going on this month and stuff like that people want to come to at least be able to ask questions and things like that. So a lot of good things to come with the Retirement Focus Academy. Take advantage of it. It's there for your resources, and again, it's always free. Because that's what we want to do first. Educate first, and if you'd like to do business with us second, great. If not, at least we can be a resource for you.
I really like that. I think a lot of people don't really want to have to maybe attend a class, but they would like to educate themselves and do it on their own time. So the ability to go to the retirementfocusacademy.com website and pull up something and watch it immediately, that's fantastic. retirementfocusacademy.com. There is no cost for this. It's a great resource. It's always free of charge. It's a great opportunity for you to learn more about all these financial topics, retirement topics that you need to understand. You don't need to understand it like Kevin does, but you need to make, educated decisions. Hey, when and how do I take Social Security? What about Medicare? Do I need Medigap or Medicare supplements, which are the same thing? Or do I need Medicare Advantage? Do I need the Part C? What about my Part D? There's so many moving parts in this. That's why this is so cool, that there's no cost to you to go to retirementfocusacademy.com. You want to learn more about a certain topic? It's more than likely there. retirementfocusacademy.com. And if you just like a second opinion, you're like, boy, I'm not sure how much risk I'm taking, Kevin, and I'm a little nervous about, we've got a different White House in place. Will taxes go up? Will that affect the markets? How much risk am I taking? Call the team. They're here to help. 843-790-9293. 843-790-9293. Next week, we're back again, Valentine's Day. We'll find out what Kevin's going to get Lauren for Valentine's Day. Have a great week. Kevin, enjoyed it.
Take care, Mark, and take care, y'all.
Advisory services offered through Black Ridge Asset Management, LLC, a registered investment advisor. Securities are offered through Peak Brokerage Services, LLC, member FINRA and SIPC. Black Ridge Asset Management, LLC, and Geiger Investments are separate and independent entities from Peak Brokerage Services, LLC. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Black Ridge Asset Management, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Black Ridge Asset Management, LLC. This radio show is a paid placement.